Hamish and Dev here today. Today we are talking about what is the value we add, or Dev adds, when you're dealing with a client. So Dev, really, initially, when they first meet you,
the key thing is the clarity, the visibility. I guess that's what we provide. And
the road forward, right?
Yeah.
Across multiple bank criteria, we can.
It's more like to see whether I can do it or whether I'm dreaming.
Yeah, the dream. Yeah, bringing it back to reality, and I think that's more important as well these days when you're trading up. Right?
Yeah, same rule applies whether you're first time buyer, investor, or trading up.
Yeah, so I think that's very important. Now, in terms of after that point, let's say you know what you're doing now, right? You got the visibility, you work towards a pre-approval. What's the value you go to then?
Next key thing is we provide insights in terms of if you're buying your first home, let's say you want to be into a specific area, we can share some property reports. And that also gives you another visibility to see whether I can still manage to get into that particular area.
And, often we'll also, any known red flags we'll kind of bring up. Interestingly, some of the stuff we're talking about now is very general advice that we, that's kind of outside of our expertise, but we do lean on other experts that we can point you to, but that's surprisingly, that's where the real value is for a lot of people.
Added value, I would say, in terms of, because often clients wants to know whether, if I want to buy $1 million 4-bedroom house in Remuera, for example, sometime it might not be possible depending upon your circumstances. I'm just using an example, though, obviously.
Yeah, and now I think the real big part where our expertise really come into play is, let's say you've bought, right? Yeah. Now where is the value come in?
And then I think the next thing is we sit with you and we understand your financial commitments, your future goals, and what you prefer in terms of your mortgage. And then we provide you different options in terms of fixed term, floating, offset, revolving.
So I think that's important, right? Smart structure, because some of the stuff is boring, and even clients that have had a home loan before, I'll often find that they have forgotten the value of a revolving credit, or
I think usually people often have predetermined or decided that fixed could be my only option, or I have fixed commitments. But often there are other options available where it could help you to save more interest. But those are niche products, may not suit everyone. However, having a clarity about your options that could help to save more interest as well in future.
I think the other thing that I also note more and more that's important is hedging, right? So understanding how to make the ongoing changes in interest rates safer. Yeah,
it's more like smart averaging, because sometimes you don't know whether the rate's going to go up or could go down. Hedging has always been against those scenarios, where it gives you more safeguards. Plus, one key principle where especially the first-time buyers sometimes don't realise there's a cashback being given by the bank as well. So it comes with 2 to 3 years or 4 years conditions. So you kind of also have to consider that option.
That's coming up as a refinance tool later, possibly.
Yeah.
The other thing I think that we probably should highlight here, which is really important, is where sometimes a client has got more than one property around tax and protection. We're not experts, but we know enough to sometimes highlight that, hey, maybe, like some of your clients we've done lately, maybe the bank has too much security, for example.
Yeah, so often customers have everything under one umbrella, and that could limit your options for future plan. For example, buying another property, and you could be restricted by LVR. So what we have done to our clients, understanding their goal, and then probably split banking, freehold one of the property if it's
That's
possible.
Before, yep.
And in future, if for example, if there's another opportunity kicks in and there's a freehold property, that you can always propose it to the new bank.
Yes, for different investment options separately. And also I think here sometimes we'll find that there may be some optimum tax structures that it might be good to talk to your accountant about. We have saved people money on that sometimes as well, with the help of an accountant. Look, I think that's pretty good, Dev. I think that pretty much covers the bulk of what we do. There's obviously a lot more. But
see, buying process depends upon whether you're first-time buyer, first-time investors, or trading up. It's a journey map where there's different hurdles, and often clients don't know where to start. And using a mortgage advisor, we use the same calculations as the bank use, same policy.
But we have multiple
options, not limiting to one bank. So I think that's also adds a value.
And I feel like we also have a more holistic approach, and that sometimes it's very general advice, but sometimes we think, hey, this might not. Yeah. We think this might not be such a great way to do things. Yeah. Like often right now with trading up, I'll see a client, and sometimes we'll talk about, hey, this is your budget. You want to keep the old home, but does the old home really make a good investment? Do you want to live in a home that's similar value to the old home? Because if the trade up has to feel like it's a trade up. Yeah. So sometimes clients get fixated on how the old home should be held. Yeah. But sometimes it doesn't make a good investment. I think
sometimes it's more like emotional kind of thing, because the kids grew up in that place and then they said, oh, I don't want to let it go. But it's one thing I've noticed in the investments point of view, you have to let go things. Otherwise, you have to
think about numbers, right? It's got to come down to numbers, and you should have one home that does make sense in terms of numbers, but you don't want to leave a trail of them.
Yeah, but as you keep pointed, the trade up has to feel that you're actually trading up.
Yeah. Otherwise, the other thing is, in some sense, what we really do here is we kind of fast forward. Yeah. Where the conclusion you might reach anyway once you go through the process, we try and bring that kind of up front too,
And it's the same thing, either first-time buyer, investor, or trade up, get in touch and we can give you some clarity and visibility to see whether this could happen anytime sooner, or we can get you ready.
We don't mind talking to people very early on. Yeah. But hey, thank you for watching. Hopefully that has added something to your lives.
All right, thanks for watching.